Forex trading is like gambling wearing a suit. You've probably heard that statement before, right? Maybe from a friend, maybe from a family member, maybe from someone on social media. Maybe you've even said it yourself. And to be fair, when you look at forex trading from the outside, it's easy to understand why people say that. Money is being risked. The future is uncertain. People can make money, people can also lose money. Sometimes people lose a lot of money. Those facts are true, but does that automatically mean that forex trading and gambling are exactly the same thing? Not quite. The truth is more complicated than most people realize. And if you stay until the end of this video, you will understand why this debate exists, why intelligent people disagree on it, and what actually separates a trader from a gambler. Let's start with something important. Both forex trading and gambling involve uncertainty. Nobody can honestly deny that. A person placing a bet on a football match does not know with certainty who will win. A forex trader does not know with certainty where the market will move next. In both situations, money is being placed at risk, while the outcome remains uncertain. This is one reason why many people believe that forex trading is gambling. And to be honest, they are not completely wrong. There are similarities there. Both involve risk. Both involve uncertainty. Both can result in profits. Both can result in losses. Both can create emotional highs and emotional lows. Both can attract people who want quick money. Both can reward reckless behavior temporarily. And both can punish careless behavior severely. So, if someone says that forex trading shares some characteristics with gambling, that is a fair observation. The real question is not whether there are similarities. The real question is whether the similarities are the whole story. And this is where things become interesting. Let's imagine two people. The first person places 50,000 naira on a football match. Manchester United to win. The match starts. Now, what happens? For the most part, he waits. He cannot control the players. He cannot control the referee. He cannot control injuries. He cannot control the weather. He cannot control the final score. The result is largely outside his control. Now, let's imagine a second person. This person is a forex trader. Before entering a trade, he studies the market. He analyzes price movements. He checks economic news. He decides how much money he is willing to risk. He chooses where he will enter. He chooses where he will exit if he is wrong. He chooses where he will take profits if he is right. He determines position size. He sets a stop loss. He follows predefined rules. Will he definitely make money? No. Can he still lose? Absolutely. But notice something important. The process is different. The trader has more tools available to manage risk and make decisions. The outcome is still uncertain, but the approach is different. And this leads us to one of the biggest differences between trading and gambling. Number one, risk management. In gambling, many people focus primarily on how they can win. Professional traders focus heavily on how much they can lose. Listen to that again. Many gamblers think first about profit. Professional traders think first about risk. Before entering a trade, experienced traders often ask questions like, how much of my account am I risking? What happens if this trade fails? Is the potential reward worth the risk? Does this trade meet my rules? What is my exit plan? A gambler often asks, how much can I make? A trader asks, how much can I lose? That difference in thinking is extremely important. Now, let's talk about another major concept. Number two, edge. This is one of the most misunderstood ideas in trading. A professional trader does not expect to win every trade. In fact, many successful traders lose frequently. Some profitable traders lose 40% of their trades. Some lose 50%. Some lose even more. So, how do they make money? Because they are not trying to predict every market movement correctly. Instead, they are trying to develop an edge. An edge is simply a statistical advantage that can produce profits over a large number of trades. Think about a casino. Casinos do not win every bet. Sometimes players walk away with large profits. Sometimes players get lucky. But casinos continue operating because they possess a mathematical edge over thousands and thousands of bets. Professional traders attempt to develop their own edge through research, testing, experience, analysis, and risk management. Now, here is something important. Having an edge is not easy. Many traders believe they have an edge when they actually don't. Many traders lose money for years because they never develop one. But the goal remains different from simple gambling. The objective is not to get lucky once. The objective is to create a repeatable process that works over time. And that brings us to another important difference. Professional trading is based on large samples. A gambler may become obsessed with one bet, one game, one outcome, one prediction. A trader thinks differently. A trader understands that one trade means very little. The next trade could lose. The trade after that could win. The trade after that could lose again. What matters is not one trade. What matters is what happens across 100 trades, 200 trades, 500 trades. A trader is trying to build consistency across a large sample of outcomes. This statistical mindset is one reason many professionals do not view trading as traditional gambling. But let's be honest about something. Not everyone who calls themselves a trader actually trades this way. This is where many people get confused, because while forex trading itself can be approached professionally, many individuals participate in it like gamblers. Let's look at some examples. If you enter trades because you are bored, you are behaving like a gambler. If you increase your position size because you are angry after a loss, you are behaving like a gambler. If you refuse to use a stop loss because you are hoping the market will come back, you are behaving like a gambler. If you risk half your account on a single trade, you are behaving like a gambler. If you jump from one strategy to another every week searching for a miracle strategy, you are behaving like a gambler. If you are chasing excitement rather than following a plan, you are behaving like a gambler. The market doesn't care what title you give yourself. You can call yourself a trader. You can call yourself an investor. You can call yourself a market expert. But if your decisions are driven by emotion, impulse, hope, and desperation, your behavior is becoming very similar to gambling. And this is one reason why the debate never disappears. Many critics are not looking at professional traders. They are looking at inexperienced traders who constantly break rules, chase losses, over-leverage their accounts, and treat the market like a casino. When they see that behavior, it's understandable why they conclude that forex is gambling. They are observing gambling-like behavior. Now, let's discuss another difference. Number 3, purpose. Most people enter a casino for entertainment. The experience itself is part of the attraction. The excitement, the suspense, the thrill, the emotional rush. Professional traders usually approach markets differently. They view trading as a business activity. Businesses have rules. Businesses have processes. Businesses have risk controls. Businesses have performance reviews. Businesses have record keeping. Professional traders often keep journals. They record entries. They record exits. They analyze mistakes. They review performance. They look for weaknesses. They search for ways to improve. This business-oriented mindset is very different from someone seeking entertainment. But again, behavior matters. If a person opens a trading account simply to experience excitement and adrenaline, then trading may effectively become entertainment for them as well. And that is another reason this topic is not black and white. Now, let's talk about luck. This part is important. Many people say that successful traders are just lucky. Others say luck has nothing to do with trading. The truth is somewhere in between. Luck exists. No serious trader can deny that. A perfect trade setup can fail. A terrible trade setup can succeed. Unexpected news can move markets. Political events can shock prices. Economic reports can surprise investors. Luck influences short-term outcomes. Professional traders argue that skill becomes more important over large samples. One trade may involve a great deal of luck. 500 trades reveal much more about skill. This is similar to many professional activities. Luck may influence individual outcomes. Skill influences long-term performance. And finally, let's discuss what may be the most important point of all. Forex trading is neither automatically gambling nor automatically investing. The way it is practiced matters. A disciplined trader with a tested strategy, proper risk management, emotional control, and a long-term statistical mindset is operating very differently from someone placing impulsive wagers. At the same time, a reckless trader who ignores risk, chases losses, over-leverages, and depends on hope is engaging in behavior that strongly resembles gambling. So, is Forex trading gambling? The most accurate answer is this: Forex trading and gambling both involve risking money under uncertainty. However, trading provides opportunities for analysis, risk management, planning, record keeping, statistical evaluation, and the development of a repeatable edge. These characteristics can make trading fundamentally different from traditional gambling when practiced correctly. But when traders abandon discipline and rely on emotion, impulse, excitement, luck, and hope, Forex trading can become behaviorally similar to gambling. The market itself is not what determines the difference. The process determines the difference. The mindset determines the difference. The behavior determines the difference. And that is why two people can enter the exact same market on the exact same day and have completely different experiences. One is following a professional process, the other is chasing a feeling. One is managing risk, the other is chasing profits. One is thinking about long-term consistency, the other is thinking about immediate rewards. One is trading, the other is gambling. And understanding that difference may be one of the most important lessons a new trader ever learns. Now, it's your turn. Do you think Forex trading is completely different from gambling? Or do you think the two overlap depending on how a person approaches the market? Drop your thoughts in the comments below. I would love to hear your perspective. And if you find this video helpful, don't forget to like this video, subscribe, and share it with someone who still believes Forex trading and gambling are exactly the same thing. If you want to learn Forex trading from beginner to pro level, check out the recommended link in the description of this video or in the pinned comments. Thank you for watching this video, and I will see you in the next video popping on the screen right now. And bye for now.